Start with the fact that 39% plus or minus globally of carbon emissions is attributable to buildings.
I'm joined today by Matt Ellis, who in 2013 founded Measurabl in San Diego. Today, Measurabl leads one of the world's most widely adopted ESG data management solutions for commercial real estate, with 11 billion square feet in 80 countries. Matt, welcome to the Towards 3C show. I'm delighted to host a guest from my adopted city, San Diego, here in Southern California. And we were just sharing about how many great cities we had the blessing to live on. Thanks for joining us.
Pleasure to be here today, Albert. That's true. And San Diego is America's finest city. We all know that. Anyone who's lived there knows that. But there's also lots of other good places. So today I'm calling in from Telluride, Colorado. 9,000 foot elevation, beautiful mountains and waterfalls. So I like to think we get to move between the two best spots on planet Earth, San Diego and Telluride.
That's great. That's great. Matt, I heard that you were very much into competitive water polo growing up. And I'm curious about how you feel certain activities shape us. I mean, water polo is a demanding team sport. You swim, you tread water a lot, you pass the ball and shoot at the goal, and it can become quite rough, a sort of water rugby, as I understood. Let me ask you, what did you take from water polo in your entrepreneurial journey?
It's funny because everything that you just said, swimming is about endurance, right? And dealing with fatigue and sometimes extreme fatigue, physical pain, right? And so when you think about the entrepreneurial experience, is very much about doing that. There is actual physical, emotional pain involved in a journey going from nothing to hopefully something. You also talked about passing the ball, right? Having teammates. And I think about that a lot in business, that my job isn't necessarily anymore to close the deal, but it might be to tee one up and get our salesperson the ball. When you think about treading water, there are absolutely periods in the business that we did exactly that. Where you're not sinking, but you're just barely holding your head above water, and you got to be able to do that for some period of time to get to the next milestone in business. So I think water polos and sport generally, especially team sport, has these elements that are analogous in every possible way to the entrepreneurial experience. That's what I take away from that.
Yeah, I mean, team sport, it's a foundation for developing grit. I got my grit from other experiences than water polo, but I can relate to what you're saying. I mean, I've never played water polo. I mean, from where I come from in Barcelona, we have few other sports like building human castles up to 9 levels high. but let's focus on your business. So tell me, what was your intrinsic motivation to start Measurabl? I mean, how many people have you got now, and how has your motivation helped build your team?
So Measurabl today is about 110 individuals. By the end of this year, we'll be about 140. And by the end of next year, we'll be about 220 calls, the plan calls for. And obviously we started, with a team of one, although that's not exactly the truth. We had a lot of support from in the fan club, if you will, a lot of indirect participants in the business that helped us go from, 1 to 100. Mm-hmm. And the other part of your question, so Measurabl came out of my experience at CBRE, and I actually started at CBRE in 2008. So go back to this conversation we're just having about sort of grit and endurance. 2008 was not a great time to get into the real estate brokerage business. You probably recall that was the beginning, the shotgun for the great financial crisis, which was primarily a real estate recession that then affected all other parts of the economy. So you can imagine going into that business. I remember very well starting out on my first day and 2 people coming out with boxes in their hands because they just lost their job. I was the last person hired in the San Diego region by CBRE. working through that experience, one thing that was abundantly clear to me was that it was not going to be possible to just be another real estate broker. They were all capable, they all had experience, and I had none of that going for me. I needed to find something different. And my personal interests in life, music or sport, but also sustainability. And at that time, 2008 was actually the rise of the concept of green building. So a lot of people associate that with, say, LEED or Energy Star certification, although the concept now is much, much broader. It includes sustainable bond markets and all sorts of capital markets transactions, data services, et cetera. But I noticed that trend and it appealed to me personally. And so in my business and professional life, I got to blend the two. And over a period of time, I became the director of sustainability solutions for CBRE, following my personal interests and blending that into my professional life. And so my motivation for Measurabl really was that. It was knowing that I liked this work, but I also liked the real estate business. How could I bring the two together? And what were the problems that, or the things that would prevent me from being successful in bringing those two together? And the problem was that for sustainability to become a significant phenomenon in the real estate business, you had to be able to measure it. So that's why I started the business, was to work on that problem.
Let me ask you about the size of carbon footprints that buildings generate. In general, I am often confused about different ways to portray carbon footprint in different industries. How are those figures estimated at macro level? And how does this fit with the way Measurabl gathers such data at micro level, building by building? Can we understand the macro versus micro?
Yeah, sure. And to be clear, Measurabl measures many aspects of the built environment. Carbon is one of them for sure, but water and waste and physical climate risk exposure and, capital expenditures into buildings and ROIs around energy efficiency and so forth. So there's a tremendous amount that we do, but carbon is absolutely one of the key ones. I remember my old boss at CBRE, a fellow named Dave Pogue, who said carbon is the new coin of the realm. And I think he was early on that, but also ultimately right. So the way that you measure this, start with the fact that 39% plus or minus globally of carbon emissions is attributable to buildings. So think about that. So 40%, let's just round up and say 40% is attributable to buildings. Now, about 18 or 19% is going to be from commercial real estate, data centers, multifamily buildings, office towers, shopping malls, so on and so forth. How do we know that number? It is a function of a statistical exercise in estimating the average annual energy consumption of buildings and applying what's called a carbon factor, which is given to us by scientists, essentially saying, here's what types of electrons based on where they're produced, what's the carbon impact of that? It's not just carbon, to be clear, it's methane and other greenhouse gases all rolled into one. So that's how you go about it at a very macro level. It's really, generally speaking, property consumes this much energy, combusts this much natural gas and so on, multiply that consumption by the carbon factor, and out comes this carbon number. Now, to actually work on issues of carbon mitigation, you can't use estimates and general waving of the hand. You actually have to go down to the individual buildings and understand within even the spaces of that building, the tenant spaces, the common areas, the individual subsystems, what is it actually doing? Emphasis on actual versus estimates. We're in that business. So we're in the business of actually understanding the genuine carbon or water or waste or CapEx or physical climate risk of an individual building. And even within that building, that can be measured using technology that we've developed. And then we can, because it's software and it's highly scalable, we can do that across thousands and now hundreds of thousands of individual freestanding buildings. So that's how you go about it in earnest.
In buildings, that you have different stakeholders. And I'm curious about the dynamics that you have identified between those stakeholders, the owners, the insurers, the banks, the property managers, renters, and at the end of the day, the users. that are all related to a building which has an active sustainability management. Is there a magic recipe to accelerate the adoption of sustainable practices in buildings involving those stakeholders?
There could be. Let's hope so. We need some magic here, given the trajectory of the whole ecosystem and broader economy. And you're absolutely right that there is an interconnectedness to the system of real estate. So when you think about real estate, most people would say it's about bricks and mortar, shade and shelter, right? It's not. It's actually about debt and equity. And you got to really remember that. Every building, every structure on the planet consists of equity and very likely, additionally, debt alone. If we can move the behaviors of that debt and equity to compel them to find or allow them to find more sustainable investments, more sustainable activity, then you're going to unleash the entirety of the power of the capital markets to transform the real estate sector, which again is debt and equity. Mm-hmm. So to me, and in our business, I think that that's absolutely the thing to focus on. The magic of doing that is everybody in that food chain has an interest in this process. So think about building a building, the materials that go in, but you're using equity and debt to construct that asset. That asset, when it gets built, will be occupied by tenants who have their own sustainability interests, much of which will derive from the buildings that they occupy. Think if you're Amazon, your footprint is your data centers and your warehouses and your office buildings. Yes, you have a supply chain. That is another additional matter. But when you want to talk about the primary directly controlled emissions, it's physical assets. So there's the tenant. And now you've got an owner who's looking for the highest possible yield. And that yield can be maximized by reducing waste in the building, a la energy consumption, and mitigating regulatory risk, a la carbon. So they have an interest too. And on it goes. The bank who lent to that building wants to decarbonize its loan portfolio because high carbon intensity loans are more risky. So they have an interest in doing that. If you're an insurer, you want to make sure that building is not going to be underwater or burnt down by a wildfire. And you want to understand its physical climate risk and its transition risk. So everybody that I'm working through here, all the way up to taking that loan, securitizing that loan into a bond or what we call commercial mortgage-backed security, and then the folks who invest and buy that. There is a shared interest in more sustainable outcomes, but they don't have, each of them, the information or the agency alone to make action happen. And that's our job, is to provide that platform where information is available so each stakeholder can make a more informed decision, and around the wheel goes.
So what I get here is that the motivations, the incentives, they are already there, but it has not been easy to connect the dots among those different stakeholders with factual data. And I understand that, well, everything is going very well for you at Measurabl. You recently closed a new financing round. Congratulations. Tell me about that, and what are your plans for the future?
Happy to do it. And yeah, to make the fine point here, the easy way to think about this whole phenomena, Albert, is back, I don't know, maybe you took economics. I got through the first couple courses at UC San Diego. And I remember really one thing that was, supply and demand and all the rest. But one thing that stuck with me was that markets work perfectly given perfect information. So the easy way to think about the phenomena of sustainability and this whole value chain we talked about is there has not been perfect information. There's actually information asymmetry and a gap in information between each of these different actors. And so when you can break down those barriers, markets will work better. And the failure of markets that we've seen in modern times, among many, is social and environmental negative externalities, because they don't know how to price and work those in. So there's my piece on markets. It really is as simple and as complex as all that. Can you get the right information to the right stakeholders? So for Measurabl to do that, so that's a big deal. That's a hard task, right? That's we're 100 people, and I talked about going to a couple hundred, and understand that we're already serving 11 billion square feet in 80 countries. That is a drop in the bucket compared to the total square footage on the planet Earth that we need to address. So we went out to raise a Series C round, and we were successful in that. Total raise of $50 million, I'm happy to report, which will bring our total capital raise to $85 million. That's a fair bit of money. And the plan for that cash is really to rapidly, and I mean, we've gone quick already, but we need to double and quintuple the pace of innovation. We need to make it easier for even the least sophisticated owners, occupiers, investors, lenders in real estate to leverage ESG in their daily processes. So we need to have a very robust technology approach to all of that. Meanwhile, it is not the case that even if everyone has perfect information, that they're always equipped to act on it. So one of the things we'll be doing with our additional cash is standing up a professional services capability. And that professional services is going to be all about teaching and enabling the market to act on their own, so folks can fish for themselves. We don't want them to rely on our professional services indefinitely. We want our professional services to kickstart the fire and then let our customers tend to it. The last thing we're going to do is work on data. One of the things in real estate, back to this concept of information asymmetry, is the whole business actually kind of works like this. So when I was at CBRE, one of the things that CBRE has as an advantage is it's the world's largest real estate services company. It actually just does more transactions than its competitors. And those transactions give it more information and insight, which allow it to outcompete. We need to make the data on ESG more easily available to our customers so that they can understand their relative performance to another asset, to another real estate peer, and make that available, information available to their stakeholders. Again, the same concept we're talking about. But that's not just going to be software as a service. It really does need to look more like data as a service, where folks can consume information and process it in their own way and make their own business decisions. And that's been a big block in the business as well. It's not just getting data, it's making that data useful. Yeah, we got to be able to do both.
That's great. That's great. So, I mean, congratulations again for this successful financial event. All that is great for the San Diego startup ecosystem, and being Measurabl in San Diego. How have you seen the local scene evolving, and what would you say to someone who wants to start or learn more about the San Diego ecosystem?
So you have this giant black hole of money and talent called Silicon Valley. And I mean that in a complimentary and with a sense of frustration too, because so much emphasis has been there for so long. And it is not the case that all innovation in the world happens in one city on the planet. You lived in Paris and Barcelona. There are fantastic innovations happening all the time and startups everywhere around the world. And it's difficult, I think, to kind of shift that attention out there. And I think San Diego is one of those markets, Los Angeles, Austin, Texas, that are beginning to get the visibility that they also deserve. One of the benefits of that is you have more or less lower cost of innovation, right? Because you have startups that will compete harder for dollars because they're not in the right preferred market. And the hardier crops grow in soil that's less fertile. So when you look down in San Diego, what you see is extremely strong companies that might have been underappreciated because of where they were growing. And I think that investors have begun to really notice that. And you see not just ourselves, but a whole host of, look at what Seismic is doing. Telium, cloud beds. I mean, I could go on, but, and then not to mention our biotechnology base that's been one of the dominant industries in the planet is in San Diego. Highest per capita PhD in the United States, San Diego, because of the universities and the graduates who stay there to go work in high tech. So I think that the obvious nature of the climate and the more moderate political environment, the proximity to Mexico, and the cultural diversity that that brings, plus the longstanding tradition and innovation in science. Last thing I can say about that for us and for like clean tech type organizations, the Keeling curve was invented at Scripps Institute of Oceanography. Climate science was, as a general statement, born at UC San Diego. So I think it's extremely fitting that we should be the pioneers in the solutions to the climate challenge. So as an industry within high technology, if you're working on issues of climate, you should be doing it in San Diego too. So it shouldn't just be biotechnology, it should be clean tech, and it should be here.
I love it. I love it. Thank you very much, Matt. Let's keep working on building a strong local entrepreneurial ecosystem. Thanks for coming to share your story, a story of true grit and sustainability. Thank you, Matt.
My pleasure. Thank you, Albert.